Imagine the undisputed king of a trillion-dollar industry delivering the best results in its history, only to see its stock plummet nearly 3% the very next day. This is the paradox of perfection that defines Nvidia's trading action after its third-quarter results in late 2025. Is this the bursting of the AI bubble? Shares initially popped almost 5% after hours, but by the next afternoon, Nvidia had reversed completely, falling from an intraday high of 196 all the way down to $180.98. It became one of the most dramatic sell-the-news reactions the AI sector has seen this year, despite during the earnings call, Jensen Huang and his team dismantled nearly every major bear case that's been circulating, from chip longevity concerns to fears that demand is too concentrated. In this video, we're going to break down the real reasons Nvidia sold off despite fundamentals, the three triggers that caused the reversal, and why research firms like Melius Research still raise price target to $320. And stay with me, because near the end of the video, we're going to look at how the new export approval changes the entire geopolitical landscape for AI infrastructure and why it gives Nvidia an advantage that no competitor can replicate. And of course, none of this is financial advice. Always consult with a qualified professional before making any investment decisions. Let's get into it. First, let's talk about the quarter itself, because Nvidia didn't just beat expectations, it demolished them. Revenue surged 62% year-over-year to $57 billion, smashing the $54.9 billion consensus. Adjusted earnings per share came in at $1.30, topping the $1.26 estimate. On paper, this is perfection, but perfection comes with a catch. The market starts treating any small concern as a big problem, and over the past few months, short sellers have pushed the idea that an AI bubble is forming. Nvidia's management team took that head-on. Jensen Huang told investors he sees something very different from a bubble. Nvidia also addressed one of the bear arguments directly, the idea that AI chips depreciate too quickly. They made it clear that chips Nvidia sold 6 years ago are still being fully utilized by customers today. That single point cuts directly into the core of the short seller thesis. And then there's demand. Not only is Nvidia selling out of its newest Blackwell hardware quarters in advance, but demand is becoming more diversified, not less. It's no longer just hyperscalers like Microsoft and Amazon driving orders. There's also massive demand from model developers like OpenAI and Anthropic, growing demand from traditional enterprises adopting AI, and sovereign demand from countries racing to build domestic AI cloud infrastructure. So if the fundamentals were perfect and management dismantled nearly all the bear cases, why did the stock fall? There are three reasons, as I have seen. The first is valuation fatigue and insider selling. When a stock is priced for perfection, even great news can trigger investors to take profits. That pressure got worse when major investors like SoftBank and Peter Thiel's funds sold their stakes. And when Deutsche Bank said the stock was fairly valued and kept a neutral rating, it poured gasoline on the idea that the stock had run too far. The second reason is broad market contagion. This wasn't just Nvidia. The entire market reversed sharply the same day. Tech got hit, semiconductors got hit, risk assets across the board sold off. AMD dropped 7.8%, Broadcom fell 2.1%, the semiconductor ETF fell almost 5%. When macro pressure hits, even the best companies get dragged down. And the third reason is the classic sell-the-news reflex. AI stocks had sold off going into earnings. Expectations were high sky. Traders who bought the rumor used the initial 5% spike as liquidity to lock in profits. Then algorithms accelerated the decline. This wasn't a fundamental rejection of Nvidia's business. It was a technical reset amplified by market psychology. But here's the part the market ignored, and it's critical to Nvidia's long-term upside. Let's break down each of future catalysts in detail. First, the Middle East export unlock. This is much bigger than people realize. Nvidia received approval from the U.S. Commerce Department to sell up to 70,000 advanced AI chips to two companies in the United Arab Emirates and Saudi Arabia. G42 in Abu Dhabi, and Humain in Saudi Arabia. Each can receive up to 35,000 GB300 servers or their equivalents. That alone is enormous revenue potential, but more importantly, it sets a precedent. If the U.S. is allowing these shipments, it implies geopolitical confidence in Nvidia's role within the global AI build-out. That reduces uncertainty and opens the door to far more sovereign AI orders across the Middle East in the years ahead. The second catalyst is the shift in analyst sentiment. Even after the stock pulled back, Wall Street raised its price targets. The average new target sits at 243, which is a 33% upside from the recent close. Ben Reitzes at Melius Research raised his target to $320. This is critical. Analysts didn't back down after the sell-off. They doubled down. Next, let's look at what this means for Nvidia's long-term trajectory. Demand for Blackwell is off the charts, with supply already effectively sold out for upcoming quarters. And demand is becoming more diversified, spreading across hyperscalers, model developers, enterprises, and nations building sovereign AI capabilities. This is not what the end of a supercycle looks like. This is what the middle of a supercycle looks like. But it's also important to acknowledge the other side of the conversation. The debate around an AI bubble isn't entirely black and white. Nvidia's fundamentals are strong and demand signals remain powerful. But markets can overshoot, cycles can get overheated, and even great companies can experience periods where valuations run ahead of reality. Whether current AI enthusiasm reflects durable long-term growth or early signs of access remains an open question, and reasonable people can interpret the same data differently. That's why the AI bubble discussion is best approached with balance. If you found this breakdown helpful, make sure to like the video, subscribe, and let me know in the comments whether you think Nvidia's path to 300 plus is realistic or overhyped. Thanks for watching, and I'll see you in the next one.